I promise you from the bottom of my heart that this video is going to change your perspective on investing. It's going to be an eye-opener. It's going to be a clear roadmap how to become financially free within a reasonable time frame. We're going to look at what kind of returns are required. We're going to look at what kind of returns can be expected. We're going to look at how much money needs to be saved in order to get to a point where things are not stressful anymore. And since this is the Bitcoin Strategy channel, and since I believe that Bitcoin is the best among the major asset classes in terms of long-term returns, we're going to focus on Bitcoin. Because here's the big problem. What is actually the expected return of Bitcoin? What can we expect when sometimes Bitcoin goes down by more than 80% over here or by more than 70% over here? Should we measure expected returns from top to top? Should we measure them from bottom to bottom? Should we take a random data point somewhere? And how much are returns actually diminishing, right? Initially, it seems to have grown much quicker than it does now. What is the most objective way to measure potential expected returns? I believe it's the average cost basis of the market. Or in other words, the realized price. The realized price, for the most part, tends to just creep up over time. And it flattens out those extreme tops that we sometimes see in the Bitcoin price. And it tends to show potential turnarounds for the Bitcoin price. So instead of measuring from top to top or from bottom to bottom, let's simply just measure the realized price appreciation over time. Now, of course, there's also different ways to look at this. And if you take the entire Bitcoin history, we of course get an overestimation of what we can expect. Now, why is it even that important how much Bitcoin returns? If it goes up over the long term, that's fine, right? It's important because it gives us a measuring stick of how much we should actually invest and how long it will take until we have good enough of a cushion to potentially not having to work anymore. I personally have used this approach, and the majority of my wealth comes from this approach. So it's really important to nail down. Here is an obvious over-exaggeration of the return. So we take the average cost basis, so the realized price, maybe after the initial run, when Bitcoin at least was already a few dollars, not just a few cents, and we take the slope up until today. If we do that, right, the realized price at the time was at $7. It's now at $38,522, right? It's not at 100K, it's way below that. And we look at the duration, 13.5 years, we get an annual return of 89%. Now again, I do believe that initially the price was still able to appreciate faster than it was today, right? Just look at how this develops. It seems like really at the beginning it was just development of the Bitcoin ecosystem. And maybe a more realistic point would be this one over here, when Bitcoin was at 20K. Since then, the slope of this line is way less steep. And it's maybe a more realistic approximation on what's going to happen in the future. Here's Bitcoin relative to the Nasdaq 100. And again, at the beginning, we have seen massive outperformance of Bitcoin relative to technology stocks. Since the 20K in Bitcoin, we haven't seen that much of an outperformance anymore. It's roughly 50 percentage points in the last 7 years. And so let's take the realized price appreciation over that time. Let's not take the price tops. Let's take the realized price appreciation because this is a better representation of Bitcoin's returns long term. And so here's then how that looks like. The realized price at the time was $5,346. Again, now it's $38,522, an appreciation of 7.2x during the time. It's a 7-year time window, and so the return, the expected return per annum is 33%. Now there is a bit of a problem with the 33% number, and that's something that I believe doesn't get discussed enough. Now there is of course this effect of monetary debasement, right? The supply of money expands over time. There is the CPI that tries to measure inflation, but nobody believes this, and I believe rightfully so. I think the best measure for how much our money devalues long term is simply to look at how much is it expanding. And luckily we've got those numbers available as well. This is USM2, and those are official numbers by the Federal Reserve. We can see how quickly the monetary base is expanding. And when you crunch the numbers, you get to a monetary expansion of roughly 6.8% per annum. So if you don't increase your income by 7% per annum, or if your investments don't make at least 7% per annum, then you will be worse off long term, right? Then it will be harder to buy that property in the future. And And so really, the nominal return is 33% per annum, but after the supply expansion, when we look at actual purchasing power increases annualized over time, we only get to 26%. Still a very, very nice number, but still 26, not 33%. What does this mean in terms of returns after 4 years? It means that our money goes up by 149% or 2.5x, and after 8 years, a roughly 6x or 519% return. This is my most objective, most realistic expectation of where Bitcoin will be going in 4 to 8 years. What kind of returns one can expect. If you now buy Bitcoin and you want to spend that Bitcoin later on, maybe for the education of your children, etc., this is, I believe, is realistic to expect. But I promised you something else at the beginning of this video, right? We talked about how to become financially free, how much we have to save, how much we have to have invested, etc. Right now we only have expected returns. I believe, especially at the beginning, and especially if you don't want to ride those waves too much, if you simply just want to get the average return, you're not trying to beat the market, then dollar cost averaging is the best approach. So that means we buy a bit of Bitcoin every single month. Now let's assume your income per month is 10k US dollars. It's above the average, but I believe that if you're deep into investing and if you watch videos like this, that you're probably an above average earner. And let's say you're saving 20% of that and you put this all in Bitcoin because you already have enough money in property and in your 401k for stock ETFs, etc. The 20% go into Bitcoin. And let's work with our real return, right? The 26% per annum. Because then we don't have to look at any inflation numbers. We simply just assume that those are all today's dollars. If you're saving $2,000 for every single month and you do this for 96 months, or for 8 years, you end up with $541,000 in today's money, in today's purchasing power. Or in other words, you want to buy a house, 100% cash down, and you currently look at that house and it's worth $500,000 roughly. You can get to that point by saving in Bitcoin for 8 years. $2,000 per month. That's how strong this effect is. Now here's an even stronger effect. We talked about $10,000 of income and we talked about 20% savings rate, which by the way, I don't think is that much. It's still above average, but I like more a savings rate of 30%, maybe 35%. And if then an emergency comes up or if then you want to splurge a little bit, it might go down to 25%. A target savings rate at the beginning of 20% ends up probably being just 15% or 10%. So target more savings per month if you can. But have a look at this, right? This real return per year of 26% translates into a monthly return of 1.9%, which means if you've got $541,000 after 8 years, you get a monthly passive income of 10k. You've got expenses of 8k per month right now because you're saving 20%. And after 8 years, you will have even a bit more in order to retire. Now, ideally, you're already in a position where you also have other investments, right? Where you're already saving in your 401k. Maybe you also have a mortgage, and all of this is just on top of that. So you're not really that much impacted by the price fluctuation at the time, because again, this passive income here is 100% Bitcoin returns, and we all know how much Bitcoin can crash. It can go down 80-70%. Maybe not anymore in 8 years. Maybe in 8 years Bitcoin will only crash by 50%, but still it's better to be somewhat diversified and to not necessarily having to count on that money. But still, this is the expected return long term of Bitcoin once you've got $500,000 in BTC. Now, is this whole 8-year plan too optimistic? I don't think so. There are some aspects that might be optimistic, but there are others also where we are quite pessimistic. For example, we are pretty pessimistic in terms of the inflation rate or the monetary expansion rate, because consumer goods on average, of course, appreciate less than, say, houses. So if you simply just want to buy consumer goods and you've already got a paid off house at the time, then the 7.8% monetary expansion might not apply to you, right? Then it's just maybe the bread and the other things that you're buying, the services that you're buying, and that increases your expected real return, right? The real purchasing power that you have. We could say there was optimistic that we took those 2 data points for the realized price as our expected return, but we are recently increasing again, right? We are in a bull market, so maybe we will see an even higher point in the future. But the argument for saying that this is a bit too optimistic would be, that we did see decreasing returns in the past, and we might see also decreasing returns in the future. But again, I feel I took the most representative data points in this data set, and the second data point is even currently going up, so that's an underrepresentation. And yes, probably after the next 8 years, the expected return will be lower. So I'm not saying that this year will go on forever, that after the supply expansion, we will continue to see 26% return. But there are also some things that go in our favor. We dollar cost averaged now, right? This is what the entire calculation here is about. But the calculation does not include any volatility in Bitcoin, right? It simply just works with the realized price. But Bitcoin is volatile. In other words, when Bitcoin crashes, whenever we buy in during a crash, we get way more Bitcoin. So actually our expected return is larger. Whenever you've got a volatile asset that over the long term tends to appreciate, when we can buy the bottoms, we tend to have better expected long-term returns. And so I stand by the calculations. It's pretty much the best math I can do on the topic. If you have 8 years and you save 20% of your money completely in Bitcoin, and you don't touch it for 8 years, and maybe you exit Bitcoin even during a bull market when the price is above the realized price, I do believe that you can retire. And this is all just relative numbers, right? Let's say your income per month is only $2,000 and you're saving only $400. Still, after 8 years, you will have your income completely passively generated. The hard part is really not generating the returns. I think that the returns are somewhat safe. They are somewhat locked in. The hard part about this is, of course, to stay consistent, to actually do those purchases, but also not to fall victim for lifestyle inflation. Because let's say you start with nothing and after a few years you've got 100K and 200K, not buying the fancy sports car or not expanding your expenses in general, right? By maybe having a family, having 3, 4, 5 kids, because now you feel so safe. That's actually what usually derails a plan like this. So if you're currently single and you plan on having a family at one point, maybe with 2 children, maybe with a bigger house, maybe with 1 or 2 cars, then expect that, right? Then you have to obviously now save more than just 20%. The way how I personally did this is I simply had a second job. So I had my primary job and I would pretty much spend all of the money of that primary job, but I also had a side hustle that made roughly 50% of what my primary job did. And I saved all of that side hustle money. And I did this over many, many years. I started buying Bitcoin over here in April of 2018. I bought and bought and bought every month. And yes, I did ride the waves as well, quite a bit as well. So I sold half of my Bitcoin stack at 52K over here. And then I started dollar cost averaging in here again. And then I sold some Bitcoin again in the middle of March of this year and just recently. And it really doesn't take rocket science, right? You simply buy more whenever we are below the realized price and you tend to sell whenever we are above. There are of course more complex models. There's also back tests, etc. I talk about those things regularly on this channel as well. There is fine tuning to be made, but the most important thing is that the basis has to stand. I like meme coin trading as well, right? I like the thrill. I like to beat the market. I like to measure myself against others and I like to see that I'm better than others in timing the market. But this is not the fundamentals of my investment thesis. The fundamentals sound super boring, Dave Ramsey style, right? You spend less than you earn. You tend to put those things that you save into investments that appreciate over the long term, and you want to be diversified to a degree. And then of course, once you get more fancy, you also time the market and then you also get into the smaller altcoins. But again, this is not the basis. This is simply just the cherry on top to maybe then retire within 6 years instead of 8 years. I believe this is a very solid plan. It's not a plan that lets you retire at the age of 70, but it's also not a plan that tells you to buy a random meme coin and become millionaire overnight and very likely lose everything in the process. Meme coin trading is just an addition to a portfolio. The fundamentals should be to have a clear savings rate, and if you're very bad at spending, then simply work more. I like lifestyle inflation as well. I've got a big house, I've got a sports car, I've got several children, but I simply work more than most. It needs to come from somewhere, right? Either you reduce your expenses and you live miserably, or you work much more and you are somewhat more planned in your life. The way how I personally do this is simply I try to sleep early every day and thus wake up early, and then I've got a lot of productive time early in the morning. But all of this now goes beyond the topic of this video, right? That's now personal development and those kind of things. I don't want to move the channel in that direction. There's already more than enough content on that. This is simply just a math-based, I believe, very solid approach to become relatively quickly, comparatively financially free. If you think that somebody could benefit from the message in this video, feel free to send this to that somebody. Feel free to post this somewhere. Of course, a like and a subscription would be very much appreciated as well. It helps the channel grow as well. See you in the next video. Potentially also see you in premium, right? There's the premium membership down below. This is where I share how I time the market. This is where I share how I beat also other traders in the meme coin trading game. Again, it's not the fundamental thesis of building wealth, but it's a nice addition on top to be somewhat faster. See you in the next video or see you in premium. Cheers!